Hello and a warm welcome. You're watching South Central, your daily dose of news, views and key discussion points from South India. You know it by now, this is the one show you need to tune into to keep pace with everything happening and headline-worthy in the 5 southern states. My name is Jude Sanath and these are the headlines we're tracking at this hour. Chennai-based online travel startup Pick Your Trail projects at least 3x revenue growth by FY30. Its founder tells ET Now in a South Central exclusive that the company plans on doubling down and focusing on key outbound markets. Speciale Invest announces its latest deep tech fund. Founding partner Vishesh Rajaram tells ET Now that the VC firm will begin raising 1,400 crore rupees early next year to invest in 12 to 15 startups over a 3 to 4 year period. A Standard Chartered branch in Bengaluru is being probed by Karnataka's Criminal Intelligence Department over allegations of fund diversions from HNI accounts. Reports say that 80 crore rupees may have been diverted from the branch in question. The ITI will monetize 91.4 acres in Bengaluru, land parcels valued at 3,473 crore rupees to help clear loans and employee dues. And Bengaluru has no potholes. That's the latest shocker from Karnataka Deputy Chief Minister D.K. Shivkumar, who says complaints of potholes across the city's roads are a social media creation. Right, starting off with our exclusive of the day. Chennai-based online travel startup Pick Your Trail is looking at a 3x to 4x growth by FY30. That's the word coming in from the company's founder, Hari Ganapathy. In an exclusive chat with ET Now, the Pick Your Trail boss told me that the startup has been growing 35 to 40% year on year on the back of increased interest in destinations like Singapore, Europe and the UAE. Hari also told me that Pick Your Trail has made a series of structural changes that will take it past 500 crore rupees in revenue for FY26, and the target now is to cross the 1,500 crore rupee mark by FY30. Here's a slice of that conversation.
Like you said, we're growing at 30-40%, which is, I think in our estimates, anywhere between 2 to 3x of what the industry is going at in India. It's a good time and a good kind of space to be at. A couple of organizational unlocks that we've done from a structural change perspective have helped us get here. Now we're going deeper into markets, and some of the markets like Europe, Singapore, Dubai are growing much, much faster than what we're growing at. So I think that unlock has kind of really helped us, and obviously the tailwinds around India itself as a market growing in travel, I think is there. So like you said, I think the goal is to grow at about 30-40% or even further going into FY29. And hopefully add a couple of more zeros and a couple of thousand crores to a top line by then.
All right, so what is the top line number looking like for FY29? I believe you're in excess of about 400 crore rupee right now, and where do you get to in FY29 at this rate?
So last year we closed at about 400 crores, close to that. This year I think we'll be closing anywhere between 520 to 550 kind of a number. That's the number we're looking at this financial year. And I think if we continue to grow at that clip, we're looking at anywhere between 1,500 to 2,000 crores, let's say by FY30. I think it's a very good space to be at. Again, keeping in mind, whatever is happening, we continue to do well. And there are also some more strategic projects we're working on, which if they take off as the way we planned, then I think the numbers can be much larger.
Right. Let's break this down bit by bit. You spoke about going deeper as a very important strategic pivot that you recently made. Which are the markets essentially that are powering this growth? Which are the ones that you're banking on as your key propellers really to have you at Pick Your Trail actually going about experiencing this growth rate and also reinforcing the confidence that you will keep at this clip come to FY29 or FY30? Which are the markets doing this? Which are the factors that are helping this happen?
See, I think the strategic shift we did was to move to the market model. So in travel, at a certain point, we think that to go in depth in a market and solve for customer experience, supply and marketing, I think customer segments vary by markets, right? So that shift early this year we did. We had some bit of friction to any change in any organization. But as the year comes to a close, we're seeing massive uptake because of that. There's inherent knowledge which is transferred better within the organization. Our customer experience is getting better. And our supply partners are seeing significant uptake in volumes, which is helping them build confidence in kind of changing their processes, again impacting customer experience. I think in our business, the way I imagine is it's a trinity. Your gross margins, your customer experience scores, right, and your conversions is where your entire profitability lies on. And I think by going the market way, we are truly able to go deeper and get better gross margins, and then also improve our customer experience scores, right? Which, if you have better gross margins and better customer experience scores, conversion automatically starts, the flywheel kicks in. I think we've seen it in Europe, we've seen it in Vietnam, we're seeing it in Singapore, we're seeing it in Dubai, and a few more markets. And I think that's going to be a very, very interesting years. Like you said, by FY30, we want to kind of accelerate to about 10 to 15 markets because now Japan's picking up, right? So is Africa, so is ANZ. So multiple markets will pick up. Vietnam's picking up well as well. So the idea is now that we have understood this and it's working well for us, we want to double down in the coming years.
Right. So let me help me understand this now. For a long time now, a lot of the growth that most travel companies were experiencing was because of that rebound that you saw post-COVID, especially since 2021, 2022 onwards. Now, what essentially you are telling me is that the growth is happening, sure, because of that, but there's an added X factor as well that's propelling you forward. How do you essentially quantify this and make sense of it so that it lasts with you in terms of customer acquisition and doubling down on what's really working for you? What's that playbook going to be like?
See, I think, like you correctly said, there was a lot of pent-up demand that people kind of really capitalized and grew travel companies coming out of the pandemic. And if you see in the last, I think anywhere between 5 to 6 quarters, a lot of travel companies have also sprung up, right, catering to this customer demand. Right? But I think at our scale today, we are at, if we're able to grow at this space, today we think in our internal estimates, we could be the largest customized holidays brand in India, right? And I think that entire positioning of customization is also a key lever for us, for our growth, because if you take the 3 kinds of customers in the way we see it, one is your package tours, which are fixed departures, right? And third is your OTA self-bookers. But there is a lot of value that we are seeing in this customized space where customers are able to make the holiday the way they want to. At the same time, the costs are not extremely prohibitive, right? For long, India is kind of touted to be not a value-conscious market, mostly price-dependent. Travel, if you see, is a lot about slashed prices, deals, and offers. But the recent brand ad also that we did, which has seen tremendous growth on YouTube and our VTRs and our CTRs are very, very good, is around value, is around the value of customization. And I think that uptick is what's also driving our growth. So it's a multiple combination of factors, right? One is our clear positioning on customization, that there are value-seeking customers who are going to be okay to kind of additionally pay 1-2% more, but then somebody taking care of the entire holiday, that's one. 2, the entire customer segment focus, and 3, like I said, the trinity of conversion, gross margins, and customer experience.
Right. So customer business versus corporate travel, what's that split like, and where does it go from here itself, that split itself?
So I think a corporate travel business is very, very nascent even today. It's just about been a year since we've been in business. So I think it's doing well. Again, it's a very small base, but it's growing much, much faster than our holiday business. We feel the corporate travel business is a slightly more longer sales cycle, right? It's a lot more B2B in some sense, but we want some good accounts like manufacturing accounts in South, some banks in West. So we're going after manufacturing, consulting, and BFSI as a core focus of sectors, and SaaS obviously being in Chennai, right? I think that's kind of going to play out better next year. We have a large pipeline of accounts that we hope to kind of sign and bring on board. See, the beauty of our business is that we're distributing inventory, right? Supply is our moat. We're distributing inventory in multiple ways. One is obviously a holiday. The other is corporate travel. And I'm sure there are more such distribution partnership opportunities, which will kind of, in my FY30 roadmap, will start helping us keep adding. Think of it like, a casata, each layer being added, and then that's kind of scaling. And in travel, as you're aware, it's an economies of scale business. So the more we're able to be more relevant to our suppliers, airline partners, hotel partners, our take rates go up, which then increases the profitability dramatically.
Moving on to news from the energy space now, French multinational corporation Schneider Electric has inked a 718 crore rupee MOU with the Tamil Nadu government. The investment will go towards expansion of the group's existing units in Chennai and Coimbatore and towards setting up a new unit in Hosur. Reports say the expansion roadmap will see Schneider generate about 600 jobs at both brownfield projects as well as the new unit in Hosur. The last few weeks have seen Tamil Nadu state its intent to double down on its manufacturing footprint, especially in the light of the RBI's Statistics Handbook, which pegged the state's growth rate at a whopping 16%, which Tamil Nadu ascribes to its manufacturing investments. Staying with Tamil Nadu and Chennai, city-based deep tech-focused VC firm Speciale Invest has announced that it will launch its Growth Fund 2. The fund in question will target deep tech startups with the scope of investing in Series A as well as late-stage funding. In an exclusive chat with ET Now, Speciale's founding partner Vishesh Rajaram said that the company was looking at investing in 12 to 15 startups over a 3 to 4 year period with larger ticket sizes per startup. Incidentally, the VC firm has also announced the joining of a new general partner in order to strengthen growth stage investment capabilities. I got to discuss all this and more with the VC fund's founding partner Vishesh. Here's a slice of that conversation.
Deep tech is no longer an experiment, it's no longer a theme, it is becoming mainstream. You have more investors coming to invest in deep tech. There are more companies coming up. The government policies are also encouraging and very supportive of deep tech from India, from India for the world. We're now learning, just sort of past experience and looking at these companies, that capital is available early on, but when you need the growth round, which is a round that will allow you to transform to a self-sustaining company, there's not adequate capital. And this is just inward learning, right? We're learning this from our own companies, we're learning this from some of the great companies we're seeing outside, and we're starting to reflect what's the opportunity here. So of course, as an entrepreneur, you have your own thesis, hypothesis, and I think it's twofold for us. One, we think this is really a time for India domestic capital or sovereign capital to back some of these sovereign geosensitive technology investments in deep tech.
Right.
The second also is that deep tech has its own nuance. There is still some element of unpredictability in revenues, which therefore may not be straightforward for a growth private equity round. And what we are now trying to do is just a byproduct of taking learnings back from having done this for 8 years and trying to improve for ourselves. So that's the journey from the past, and that's what we're looking forward to in 2026.
Right. So given this clear nuance that lies with investing in deep tech companies, no less in Chennai, which is of course a big deep tech hub, as are several big cities in South India as well, what's in it for investors really insofar as Fund 2 is concerned? It's a large amount, 1,400 crore rupees. So where are investors here looking to get bang for their buck in terms of banking or betting big on the deep tech ecosystem in Chennai and perhaps beyond?
So the sectors that we look at in deep tech is consistent to space, to energy, to manufacturing, and to health, right? And they sort of remain the same, whether you're investing in growth or you're investing in early. But I think the growth fund allows for investors to come in at a slightly later stage when the technology risk is addressed, a product has been built, and you still have one more lap to run to get to monetization to become a self-sustaining business. So I think that's a very different risk-reward ratio that we do believe institutions and institutional investors may also take a liking to. Right. That's at least the belief with which we're thinking about this.
Absolutely. So let's break this down then. 1,400 crore rupees. I know you haven't begun deploying yet. That will, start in the next year, which is a couple of weeks from now. From Series A to late stage funding, that's what you're looking at in terms of the companies you will be investing in. What's the wish list like? How many companies would you like on your portfolio? I know you can't divulge names, but give us a semblance of the kind of technology that's on the radar. I'm sure a lot of scouting has already been done. Lay this out for me, if you will, Vishesh.
Yeah, so I think our hope is to invest in about 12 to 15 companies over the next 3 to 4 years. The sectors that continue to be of strong interest to us is space. It's definitely advanced manufacturing, EV planes, EV motorcycles. Quantum has really taken off. Defense tech is also a big theme to what we've been doing. And so a lot of it is just a continuation of what we've done in the past that we're building on top of, because one of the things that's core to an organization like ours is just knowledge capital, knowledge learnings, those micro insights, right? And you'll notice that we've invested in a lithium company to then find a zinc company and then find a green hydrogen company. So there's a lot of micro insights that we hold close to us that we value a lot, which allows us to make bigger and better investments.
Right.
So that theme of what we've done in the past is here to stay, and it'll continue. So some of what will come in the growth will be very much on just the themes I've outlined.
Right. So correct me if I'm wrong, but if you're looking at 15 companies at the top end and a 1,400 crore rupee total fund size, that could amount to some very large checks per company. What is that math going to be like for you? And compare and contrast this with what you have been doing so far in terms of ticket sizes per startup.
So the early stage funds of ours typically invest up to $1 million with, of course, a significant reserve for follow-ons. I think in the growth vehicle, and we've already done one smaller growth vehicle, which was really the vehicle where we did in 2023 to learn from, right? And I think one of the big learnings in growth is the multiplier effect. We don't have to underwrite the full round, but the fact that we're in a position to lead a round does allow for more capital to come around it, because that's just the company's ability to leverage capital, right? So we do believe that if we write a $5 to $8 million investment, it's very likely to translate to a $20+ million round for the company.
Right, absolutely. And even as we speak, and as you announced the start of the fund, you also have a new general partner on board, tasked with overseeing the growth functions itself. What does Mr. Jacob bring to the table, and why the need to have a new general partner at Speciale as things stand?
No, I'm glad you asked the question, because that's what I'm most excited about, right? I think Vijay brings same DNA that Arjun and I have as founders of the fund. Vijay is someone I've known for over a decade. He's been associated with Speciale for the last 2 years because we were working on some international partnerships, particularly in Southeast Asia, that he was leading for us. But what's most interesting is his own background. He was an early employee at Actis, which was the old private equity fund in the year 2007. He then worked at Merrill Lynch Private Equity that got spun out, and he was a founding member of a private equity fund called NewQuest.
Moving on to Bengaluru now, a Standard Chartered branch on the city's MG Road is the subject of a CID probe after complaints of fund diversions began surfacing at the branch in question. Now, some reports say that as much as 80 crore rupees were transferred from accounts belonging to high net worth individuals at the branch. The Karnataka government has now ordered the state's Criminal Intelligence Department to take over the investigations. Suspicions over diversions of funds at Stan Chart's MG Road branch first began when an account holder complained of nearly 2.7 crore rupees being transferred out of the account in question. A further probe then revealed that the diversion wasn't an isolated incident and larger sums may have been transferred in and out of customer accounts. The CID's investigation hopefully should have some answers to these fund transfers. And on to our shocker of the day, and it's from no less than DK Shivkumar, who claims Bengaluru has no potholes. Now, Shivkumar was answering a reporter's question over civic infrastructure in the city when he claimed that Bengaluru does not in fact have any potholes, and that reports of widespread potholes in the city was in fact a creation of social media. Let's listen in to what the Deputy Chief Minister said. Moving on now, the controversy around the abandoned T20 International at the Ekanya Stadium in Lucknow simply refuses to die down. For context, the match in question, that is the fourth T20 International out of a 5-match series between India and South Africa, was called off due to excessive smog in Lucknow. Criticism has been levelled against the scheduling of these matches, especially those in North India, given the smog and low visibility during the winter months. Congress MP from Thiruvananthapuram, Shashi Tharoor, has now openly called for all international cricket matches in winter to be held in South India, given the better weather and low AQI in these parts. In fact, in a public interaction with fellow MP and BCCI office bearer Rajiv Shukla that has by now gone viral, Tharoor tells Mr. Shukla to have cricket matches in Kerala at this time of the year. Let's listen into that conversation between both leaders.
हाँ देखिए राजीव जी मैं कह रहा था कि ये जनवरी में नॉर्थ इंडिया में मैच शेड्यूल करने के अलावा आइए केरला
नहीं वो केरल बात नहीं लेकिन ये शेड्यूलिंग में ध्यान देना पड़ेगा कि 15 दिसंबर से 15 जनवरी तक
बिल्कुल
जो है मैचेस वो अगर नॉर्थ इंडिया मैच के जो अच्छा आगे ध्यान में रखेंगे केरल को तो मिलते ये तो रोटेशन पॉलिसी है तो
लेकिन आप इस पीरियड में दिसंबर 15 से जनवरी 15
सारी जगह मैच थोड़ा केरल में शिफ्ट कर दिए जाएंगे
यही अच्छा होगा ना हमारे लिए अच्छी बात है धन्यवाद
Back to news from Bengaluru now, and this one is from the land deal space. ITI Limited is looking to monetize a 91-acre land parcel in Bengaluru to raise about 3,473 crore rupees to clear outstanding bank loans and statutory dues. This according to the Union Communications Ministry's submission to the Lok Sabha earlier this week. The land is spread across 4 plots near the ITI township in Krishna Rajapuram, with the largest being a 44-acre land parcel estimated at about 1,650 crore rupees. Proceeds from the sale will be directed towards reducing the company's debt burden. ITI, remember, has been making losses despite an order book of nearly 18,750 crore rupees, and the move reflects efforts to strengthen its finances. In fact, my colleague Ishika Kaparia has more on the development.
Right, so ITI is up after the government reiterated support and gave clarity on land monetization. Now, in a Lok Sabha reply dated December 17th, the government said that about 91 acres of ITI's land in Bengaluru, in areas such as KP Pura and the ITI township, have been identified for monetization with a potential value of over 3,470 crores. Now, this is important because the proceeds will be used to repay loans, clear pending statutory as well as employee dues worth 339 crores and strengthen ITI's balance sheet overall. Now, the government has also highlighted things such as significant financial support has already been provided to ITI, including equity for capex and grants to clear liabilities. Now, overall, this improves the balance sheet visibility and reduces financial stress of the company, and this is why the stock is seeing positive momentum today.
On to news from Kerala now. A UAE-based feeder fund, which is a consortium of HNIs with roots in Kerala, will part with funding totaling to 1,000 crore rupees for the state's startups. Spearheaded by Dubai-based Global Alliance Group, the fund will add to an existing fund of funds set aside for Kerala's startup and innovation ecosystem. While no details on which startups will receive funding have emerged, the announcement, which came at Kerala's annual startup conference, also comes as good news to a state whose startup ecosystem has been exposed to a less than ideal funding pipeline. Well, with that, we're completely out of time on this episode of South Central. Thanks so much for watching. Have a great weekend, and we'll see you next week with more news and updates from South India. For the moment, it's goodbye from us.
In